to the EAC's training on HAVA earned interest. This webinar is focused on building compliance for earned interest on federal grants. Today we'll focus on what is earned interest? What are the federal requirements around earned interest? What are HAVA's requirements? How do you deposit and calculate interest? How do you report it? And what additional information on earned interest might there be? We'll address any additional questions and support at the end of the slides. For our first question, what is earned interest? Earned interest represents the dollars that you earn from depositing your grant into an interest-bearing bank account. The interest earned on your grant is in addition to the dollars we provided through HAVA. So again, if you received a grant for $1 million and you earned $50,000 in interest off of the million, those dollars would be cumulative in total for you to expend on. Any interest dollars that you do gain from the deposit into an interest-bearing account must be spent on allowable grant activities. So those interest dollars you expend must be spent on the same allowable, fully allocable, or partially allocable activities from HAVA. What are not federal interest dollars? It is not program income. Program income is the money that you earn from charging fees or services related to the activities on your federal award. Examples of this might be charging people for the use of voter registration lists, or if you have a training or conference that is funded by your federal grant, but you charge a small fee to attendees and you hold on to those fees, that would be considered program income. Program income is never the same as interest. Federal interest is not avoidable. All advanced federal grant dollars must be placed into an interest-bearing bank account per the uniform guidance and per HAVA regulation. Also, earned interest is not the other definition. Uniform guidance mentions federal interest as the government's share of property, equipment, or supplies purchased with federal funds. Federal interest is simply that interest from the federal government, not the dollar amount interest. What are the federal requirements? As mentioned, the uniform guidance stipulates a lot of financial management regulation and rules, and they identify that when you're looking at any sort of income or expenditures, you need to have systems that identify all federal awards, that ensure that amounts are accurate, current, and complete for all of your financial disclosures of the federal award, that you're able to record and identify the source of funds for all your federal funded activities, that you do have control over and you're able to account for all your federal funds, property, and assets, that the comparison of expenditures with the budget amounts does occur and that you have a way to check that you have written policies, procedures, and that you implement 203.05, which is the federal payment portion, and that you have written procedures for determining allowability of costs within accordance of the terms and conditions of the federal award. It's always good to remember that these financial management regulations are in place to ensure sound footing for when you go to do things like report all your expenditures, whether or not they're related to interest. So if we continue to look at the federal guidance, if we look at 2 CFR 200.332, subsection A, areas 2-3, here's the requirements for pass-through entities. HAVA may be passed through to subgrantees, meaning your local jurisdictions or otherwise. And anytime you have requirements that are imposed by the federal government, you must pass through those onto the subrecipient so that the federal monies are used in accordance with all the federal regulations, statutes, and terms and conditions of the HAVA award. So just be mindful, if you provide reimbursement or funding to your local jurisdictions, they have to abide by the same federal rules and regulations because those are federal dollars. Additional federal regulations. So when you have advanced payments like HAVA grants, you must put them into interest-bearing accounts unless the following information applies. For instance, perhaps you have a subrecipient that receives less than $250,000 in federal awards every year. Then they would not be required to make that deposit into an interest-bearing account. Another exception is maybe the best reasonably available interest-bearing account wouldn't be expected to earn any interest in excess of $500 per year on a federal cash balance. Federal interest rates do vary quite wildly, and our HAVA awards tend to be large enough that they would earn over $500 each year, but there are certain circumstances, particularly with our territories, where this might be applicable. Another exception, if the deposit would require an average or minimum balance so high it wouldn't be feasible for the federal and non-federal cash resources to work with that bank, that would be an exception to depositing into an interest-bearing account. And lastly, if a foreign government or banking system prohibits or precludes interest-bearing accounts, if you have that as part of your own state statute or legislation, simply let us know. That could preclude you from depositing it into an interest-bearing account. An additional regulation in subset of 200-305, the standards governing the use of banks and other institutions advance payments under federal awards are as follows. Advance payments of federal funds must be deposited and maintained in insured accounts whenever possible. So do be sure that if it's on you to deposit your HAVA funds into an interest-bearing account, that you're doing so with a fully insured bank. Now there are HAVA requirements that do mention interest, so let's get into those. In HAVA 104D, deposit of amounts in the state election fund is clarified. And it states, when a state has established an election fund described in section 254B, the state shall ensure that any funds provided to the state under this title are deposited and maintained in such fund. We'll get into that more. So in 254B, subsection 1D, the election fund is described. It's for purposes as described where you establish with your state treasury or government and you use the grant in accordance with the following amounts. So more specifically, when you get drilled down into HAVA, you'll see that in that D line, interest earned on the deposits of fund is noted and clarified. So what this means is that the HAVA statute clearly identifies that when you receive advanced federal funding from us in HAVA, that we are asking you to create the election fund, which is an account within your bank that earns interest on the deposit of the fund. We also had an advisory back in 2005 where the question was posed, does the state have to remit interest earned on Title I, Section 101 funds to the federal government? So put more plainly, when you earn interest on your 101 grants or otherwise, do you have to give that interest earned back to the government? And what we ultimately concluded is that you can use the earned interest to meet the requirements of Title III. You can use it to meet the requirements of Title I. And what we're asking you, in effect, is to take the earned interest and use it towards allowable activities to further the program that you have set forth with your HAVA funds. All right, we've been talking a lot about earned interest and regulation. Let's take a little break and look at a beautiful picture of a lake in northern New Mexico. Okay, hopefully everyone's refreshed. Let's move on to depositing HAVA funds. So when it comes to the deposit of your HAVA grants, we cannot require you to use any specific bank or any specific banking requirements. Again, we're looking per the former regulation stipulation that it's FDIC insured and that, you know, you're not necessarily banking with someone where there would be problems down the line. But ultimately, you need to be able to account for your funds received, your funds obligated, and all of those expenses. You need to minimize the time elapsing between the receipt of your advance grant payment and the transfer into the interest-bearing bank account. So put more simply is, when we send you the HAVA grant monies and your state receives them, you need to quickly and in a timely fashion, with the minimal amount of time elapsing, get the money from wherever it's received at the state into that interest-bearing bank account. The EAC has defined timely deposit as 90 days. We'll get into this more in a moment, But based on regulation in 2 CFR, because they use the phrase, the time elapsing should be minimized, we have defined that timely amount as 90 days. Let's talk more about depositing your funds. If a state is unable to place their advanced HAVA award into an interest-bearing bank account within 90 days of receiving it, then they must make a calculation to determine the amount of interest lost for that delay. What that means is we are giving you 90 days from receiving your grant award to deposit it into an interest-bearing bank account. If at 90 days you have not yet transferred those funds into that interest-bearing bank account, then the clock starts for lost interest. That means that from the time of receipt till the time of transfer, you have 90 days, and thereafter, should there not be transfer, you are on the hook for calculating lost interest and restoring it back to the HAVA award. Let's look at this a different way. Let's do a little quiz. With the guidance on this page and the details here in the box, approximately how many months should the state calculate lost interest against? So for example, let's say we sent your grant and you received the money on February 1st, 2023. And then there were delays and you were not able to place those funds into that interest-bearing bank account until August 1st, 2023. There's an approximate 6-month time of elapse and you have a 90-day grace period. That means for February, March, and April, you had the chance to transfer it into that interest-bearing bank account, but once at the 90-day mark, come May 1st, that's when the clock started for calculating lost interest. Because the funds did get transferred as of August 1st, we're looking for you to calculate interest lost between May, June, and July. Let's move on to how to record earned interest. States must maintain records that identify and clarify accrued interest amounts for all their HAVA awards, inception through closeout. The EAC requires interest income to be reported on their FFR for both state and subgrantees where applicable. No matter which state office performs your interest calculations and recording, you as the grantee are responsible for maintaining accurate records. Here's an audit tip. Keeping financial reports and documentation tied to your submitted FFRs is very much necessary for a successful audit. Financial reports that reflect the same interest amounts entered on your FFRs do provide helpful and concrete evidence to the auditors, which satisfies their sample testing. When there are adjustments or corrections that you need to make to reported interest, please be sure to hold on to that related documentation so you can provide it as backup for any potential audit questions. Now on to calculating earned interest. Accrued interest calculations can be performed in any type of reasonable manner. Often, states' financial offices have a method for calculating and recording interest on behalf of the election office, and this is also considered reasonable and acceptable. Interest rates and calculations can vary greatly between states and territories. So let's talk about reasonable methods of calculation for earned interest. Most states have particular ways of calculating accrued interest against their HAVA funds. We want to provide some successful examples of states where they were able to easily pass the recent earned interest audit. Let's start with Idaho. The earned interest is calculated by the state treasurer's office in Idaho. It's deposited into the agency fund once a month. Interest deposits and expenses are tracked internally using interest-specific expense codes within their financial system. Because they use these specific expense codes, they're able to easily pull reports and put that information into the FFR when reporting back to the EAC. In Nebraska, funds are invested daily by the Nebraska Investment Council. Earnings are allocated, distributed, and recorded monthly. Elections office staff can pull interest reports from the state's entries using their unique interest code. Where there are multiple HAVA grants earning interest, the elections office maintains a spreadsheet so they can allocate interest based on each grant's share. 2 staff members are trained to pull reports and complete the FFR. One employee will enter the data and the other will review and verify it. In Nevada, the state manages bank accounts and calculates interest for all their agencies. The SOS office reports quarterly on HAVA fund daily balances, expenditures, and revenue. The state calculates the SOS's share of interest based on their quarterly report. And once the state finishes that quarterly calculation, they process it through an accounting entry that moves the amount earned into the election fund. The state posts a copy of that quarterly calculation report internally so all stakeholders can access it. In Texas, the state treasury office allocates interest once a month proportionally to their state code. Allocation is based on total daily collected cash fund balances and interest earnings, minus the bank fees. The treasurer's daily fund balance is tied to their general ledger cash financial reports. Since this is a daily computation, sometimes the amount of interest appears negative, and that's okay. Markets go up, markets go down. Every once in a while, when you're reporting on a quarterly basis, if you are monitoring interest this way, you might show a negative balance even in your FFR. When this occurs, just leave the EAC a comment in that FFR so we know why the amount decreased. All related data is fed into the state accounting system for Texas, which the elections office staff can pull reports from so they complete their FFR. The SOS office saves all their supporting documents from the accounting system and then links them to their internally created FFR workbook. Upon submitting their FFR, they make that data static so they can ensure that it's kept for future reference or audit review. So a couple things to reflect on here. These examples exemplify how sometimes the state is monitoring interest on a daily, monthly, quarterly balance basis. Each state has a set way for reviewing and monitoring and executing information related to the interest. Please be sure you're communicating with your financial offices within the state so you know exactly how this information funnels through, where you can pull the information related to it, how you can pull those financial reports, and how you can make it easier for yourself to put the information into the FFR and record and support and submit. Here's some successful audit takeaways related to our examples. For each example, there's an established method for calculating and recording interest, and it's not necessarily specific to HAVA grant funds. It's statewide. Each step of calculating, reporting, and monitoring earned interest is maintained in records, which both internal and external offices can access and review. Also, the same process is consistently kept when calculating and reporting interest. Clear records and backup documents prevent staff turnover from interrupting their office's ability to track their earned interest. Here's a grantee highlight, one more example. The Oklahoma State Board Election Office works with their state treasurer to calculate interest, which is reported back to the SBE on a monthly basis. They have a monthly routine, and this routine affords their office a successful earned interest audit review because they're able to pull and maintain documentation easily. We want to take a moment to highlight something. The previous examples are from states where they have a fiscal office who has an established way of supporting HAVA earned interest reporting needs. We recognize there are many grantees who do not have a state financial office to support them in this way. Some grantees can stand alone in their efforts to monitor, record, report, and then document earned interest across their HAVA grants. Should you need additional resources to bring your earned interest monitoring into compliance, we ask that you contact your grant specialist about using HAVA funds to maybe engage a consultant or contractor who might help you create an accurate and replicable way to record and report interest from your grants. All right, now on to reporting all that data. The EAC uses a custom version of the SF 425, which is the Federal Financial Report, to collect specific data related to HAVA formula grants. So specifically, lines 10P, 10Q, and 10R focus on the interest income earned from depositing your federal award into that interest-bearing bank account. Interest earned from federal awards must be spent on allowable HAVA activities. Interest earned and any expenses from federal interest dollars should always be reported cumulatively in 10P through 10R. Let's talk about state match interest. In previous guidance, we've asked grantees to populate the interest earned from cash matches that were deposited and earned interest on lines 12A and 12B, and subsequently 10I, 10J of their FFRs. We've determined that the interest earned from non-federal dollars does not need to be reported on the FFR. Grantees can stop reporting state match interest dollars on their FFR as of F25Q1, which is the reporting period ending 12/31/2024. So to say again, please continue populating 12A and 12B if applicable to your state office through FY24's annual report. Come FY25's Q1 report that's due in January, you no longer need to populate 12A and 12B. However, if you're a grantee that uses cash to meet your required match and you've been earning interest and you want to show the expenses related to that, we are going to ask that you keep putting the expenses related to earned interest match from cash match on lines 10J. 10I should not be affected. We want to see only the required federal match amount in 10I, but if you're adding additional dollars towards their match, we want to see that on 10J. We'll get into that within the FFR so you can see an example soon. Now let's look at the FFR up close. Let's complete an FFR together. We're going to focus on 10P, 10Q, and 10R, which are the lines that focus on interest earned for federal amounts, federal interest expenditures, and then the remaining balance. And then we're going to poke into the no longer required state match information in box 12. Let's now look at a federal financial report together in the GLASS reporting software. Today we'll be looking at the stage environment, which has example data only. When you log in with your credentials, you'll see a menu that looks very similar to this and a home page that provides these additional details. One of the quickest ways to get into a report is by navigating to the To-Dos menu. Oftentimes this will be collapsed and look similar to this. And for today, since we're looking at a federal financial report, let's click on FFRs and let's choose a report that we want to complete. For today's example, we're going to look at the Election Security Final Report. By clicking on the pencil icon, it'll bring you through to the report very quickly to open and edit. On the first screen, you'll see your award details. Please be sure to double check that all information is up to date and accurate. It'll ask you to complete your basis of accounting. Today we'll choose accrual. Click Next when ready. If you ever need to step away, you can easily save and exit and hold your data that you've completed. If you find that you need to cancel out, you can absolutely do so by clicking Cancel. That will not save any of the data and it'll simply redirect you to the home screen. Next up is the Transactions page. This is where you enter all your cumulative expenditure data for the period reporting. Today we're going to focus on 10P, 10Q, and 10R since we're focused on federal interest earned and federal interest expenditures. Here in 10P, we're going to put the cumulative amount of interest earned for the reporting period. Today's example, we're going to show $1 million. And let's say, since this is an example final report, that we expended all the federal interest earned at $1 million. You'll see 10R automatically calculates and represents $0 once we enter that information. Please hold in your memory line 10J, the recipient share of expenditures. Recipient share is also the other term for match. So 10J shows the amount of match dollars expended. We're going to navigate back to this later when we talk about state match expended. But for now, we've completed our federal interest information. If we were completing this report in full, we'd also enter all the other data required. Let's move on to the next screen. Indirect expenses on box 11. If your organization has a negotiated rate or takes the de minimis, you would enter the information here. For today's example, we're not going to enter any information. In box 12, we have examples for state interest earned and state interest expended. So these boxes are for grantees who meet the required match for the grant by depositing cash. That, in other ways, you can say is if you use cash to meet the match and you deposit it into that interest-bearing account, and then you earn interest off your match dollars, we want to see for the reporting period only the state interest match expended and earned here in box 12. We have been asking for this data for some time, and we have come to realize that this data is no longer necessary for our reporting or for yours. So you may continue to enter this information through the annual FY24 reporting period, but as of Q1 FY25, in other words, the first report you're going to complete in January of 2025, we will no longer require you to enter this information in these boxes for 12A and 12B. And for today's example, let's say that the amount of interest earned off the state match deposit was $100,000. And let's say, again, it's an example final report, that the amount of interest expended was the full amount at $100,000. There's no additional calculation in box 12. It's just simply straightforward information on interest earned and expended from the state match. Again, these should be on allowable expenses that are related to HAVA activities. Since we won't be asking you to report this information starting in FY25's reporting period, what we do know is that some grantees do use the interest that they earned off of their cash match and put it back towards their regular match expenses. What we're asking for you to do in those situations is to populate that additional expenditure amount in 10J. So as I mentioned a little bit ago, hold 10J in your memory, and let's say for this example's sake that you had a required match of $8,098,765, and you earned an additional amount in interest on that match of $100,000. So let's say you expended everything. You would report in box 10J $8,198,765. As you can see, the automatic calculation in 10K shows a negative $100,000, which simply represents the additional money you spent towards match. In order to clarify and help justify why there's a negative balance in 10K, we ask that you provide a comment related to this in the comments box. You can easily navigate over to comments by clicking on the tab in the left menu. And we ask for a simple explanation such as 10J negative balance is due to overmatch from expended state earned interest match. You can leave whatever comment you like, but leaving a comment really helps us understand as we're reviewing and approving your reports why we're seeing the balances we're seeing. You can always use the comments box to clarify anything. Sometimes interest goes negative due to market period balances, but ultimately 12F is a really great way to hold information, explain information, and it lives here for future references that we may have. When you're ready, click Next. Once you've completed the information among all your screens, and if you complete everything in transactions and that check mark comes up, you can sign and certify. We ask that you put all of your current information in here just to be sure we can reach you if we have any questions or clarifications. And when you're ready, you can submit and we'll automatically get a notification when you do, or you can save and exit or backtrack as needed. Let's now go back into our presentation. To some other earned interest information that may help you. Your election office may calculate earned interest on HAVA awards, or maybe your state finance or treasury office is doing the calculation for your office. The way your interest is monitored, calculated, and communicated can look slightly different from other grantees, and that's okay. Report your last known earnings when necessary. So some states calculate interest once a year. In those instances, please simply report your last known calculation on the FFR. If it might look a bit confusing that your earned interest hasn't changed for almost a year, we ask that you provide a brief comment in that comments box so we can understand and navigate as to why that earned interest amount hasn't gone up. Also, if you find that your interest has a dip and goes down, we ask that you provide a comment in the same section so we can better understand why the fluctuation went down. Timely and minimal time elapsed. As we've spoken to, that Uniform Guidance Regulation advises the transfer of advanced grant funds to an interest-bearing account should occur with minimal time elapsed. To reiterate, this can also be described as timely, and the EAC advises 90 days as timely for the transfer of HAVA funds to an interest-bearing bank account. Let's read over this FAQ together. If a state maintains a higher level of state share than what's required in the election account, how much interest and match should be reported? And the answer is the best practice is to only report the required match amount and associated expended interest where applicable. As we spoke to earlier, states can over-report expended match dollars when their earned interest is put towards those match expenditures. We ask that you keep a record of this in the comment section of the FFR, and all identified income and expenses on the FFR are subject to audit review, so please be sure you maintain all of your records and documentation. All right, one little quiz. The EAC's recent guidance defines timely deposit of HAVA funds into an interest-bearing account as A, 90 days, B, 3 days, or C, the timeline is determined by the grantee's fiscal office. Our hope is by now you all realize it is A, 90 days. Here are the outlined resources provided in this presentation. If you download the PowerPoint, you will be able to click on these hyperlinks and navigate to all of them. We thank you for all of your time and patience reviewing the Earned Interest webinar today. We hope you find it helpful. If at any time you have any questions, just simply reach out to the grants team at the EAC. You can contact your related grant specialist or simply email us at grants@eac.gov. Thank you.